All right, hi guys, welcome back to our weekly trading forecast for the week of 13th of July to 17th of July. So let's quickly move on to the dollar index. All right, so this is the dollar index. I'm looking at the weekly charts right now. So I just want to bring your attention to the weekly chart and for you to know that historically speaking, for the past few years, the dollar has already reached a high. The highest was about 103 as compared to the highest previously in December 2016, which is about 103 point, almost 104. But anyway, it's starting to fall from a high, and we can see that this rising channel, or what I call a rising structure, has been broken below. And this week itself, we are seeing the price is still going down further, breaking the previous low of the week before. So I think it is quite clear right now that the dollar is in a downtrend. So going forward, we want to sell the dollar more than we want to buy. So let's look at the day charts. Now, in the day charts, we have seen that the price has been trading within the range in between 97.7 and the price of the lowest, it was somewhere at 95.7. And so there was actually a structure forming right here, something like a rising, an ascending triangle, which we have seen that the structure has been broken below. So and the high and the lows are also getting lower as well. So I think this is a clear sign that going forward, dollar is still going to depreciate further. In the 4-hourly charts, okay, we can see that recently there's a falling channel being formed right here. But then last, I think it's last Thursday to Friday, there's a strong rebound, a pullback, which actually caused the top of the channel to be broken. Price came down, being supported somewhere at the region of 96.5. And so in this week itself, definitely, like I said, I'll be focusing on selling the dollar. So a few price to take note. Number one is to wait for the price to retest the previous high right here. In fact, we want to take note of this previous low, which turned into a resistance level, supported resistance level at 97, as the first level to sell the dollar again. But there's a possibility that price may pull back even further to form a AB equals CD pattern, and that will bring us to the next selling, or rather the supply zone between the price of 97.3 and 97.5. So these are the two levels I'll be looking for to sell. But however, there will always be a possibility that price can pull back even further, maybe a third wave, and that might bring the price all the way back to the range high of 97.7, and that may potentially cause the entire structure to continue within another range. So, I mean, that's something we'll look for in the future. But as of now, these are the few levels I'm looking at to sell the dollar. And the ultimate goal, maybe just list a few levels. In the 4-hourly chart, I think it's very straightforward. We'll be looking at the previous, the current low right now, or rather the support level, which is somewhere at 96.3, then to the previous low at 95.7. But if you look at the day charts, the previous low, 4-month low, is somewhere at 94.6. So that is the final level we are looking at in this week. But going further into the future, I do expect that the price may continue to fall all the way to 2018 low, which is about 90. Okay, but that is something that we'll talk about in the future. And so that's for the dollar. And of course, I just want to bring attention to the recent COVID cases in the US, which still has been spiking higher and higher. So that that's definitely a bad news for the US, and for the dollar itself. It's kind of contradicting because US dollar is kind of a safe haven asset. But looking at the long term wise, we want to look at the health of the economy in terms of its recovery from this COVID. So I think the long run, as the Federal Reserve needs to keep their interest rates low and unchanged throughout 2022, is still going to affect the US dollar negatively. So not just the new cases that's increasing, the death rate, okay, also spiked up last week and it's not coming down yet. So that is a very bad sign for the US economy as well, and definitely in the long run, it will be a negative effect for the dollar. And so when we come back to the technical chart, we can see that there is really a lot of space, for the dollar to drop, and especially the dollar is still considered trading at a higher price, historically speaking. So that's for the dollar index. And next, let's talk about the gold market. Right, so the gold has been rising on because of fear of a second wave of a COVID. In fact, it does seem that the US is entering into the second wave of the COVID cases, which has been seen rising. Death rate also shot up. So we can see that the gold has also been rising, as I think as expected, as well as what we have forecast recently. So right now, on the technical charts, we can see that in the weekly charts, the gold has reached the top of a rising channel, which has been around for a year or more. And right now it is very deep into the 9-year supply zone at the top, between the price of 1,780 to 1,825. So let's take a look at the day charts. All right, so in the day charts, we are still seeing a very strong bullish structure right here. There's little pullback on the last 2 trading days last week. But however, it definitely looks to me that it's a pullback, and gold might continue to appreciate further. In fact, if we were to plot this rising trend line, we can go all the way into the 4-hourly charts. Okay, try to adjust a little bit, and we can see that will be an opportunity to buy the gold very soon. The first level, looking at the previous high turn, or rather the previous resistance turn support, there will be somewhere at 1,787. So watch out for that price. The gold might continue to climb in this case. And looking at the previous uptrend, just take note that based on historical uptrend, the current uptrend right now, the current bullish wave might have reached its potential. It might. So if there is a chance for you to buy the gain as it pulls back and probably somewhere 1,787, try to take profit as soon as it retests the previous high. Maximum, we're looking at 1,825. That should be somewhere where this entire bullish trend should be fulfilled, okay, based on the repeating patterns as we can see, in the chart itself. So that's quite straightforward for the gold. But I think that once this trend line is being broken, there might be a period of a pullback, where we, in the short term wise, we want to sell the gold instead. So just look for opportunity to buy first at 1,787. Otherwise, wait for the breakout of the trend of this current bullish structure. Then we can look for short-term sell for the gold, which has already, a big kind of overbought in this case. All right, next, I will pass my time over to JJ to share his trading view for the week.
All right, first, for me, would be dollar CAD. As you can see that after dollar CAD broke out of this descending triangle, it has been somewhat ranging, going sideways. And in the process, we can see it's kind of formed like a head and shoulder pattern here. and currently the price is forming the right shoulder, which just nice. If we go to, you can see it more clearly on the 4-hourly time frame. There is this falling trend line, and the right shoulder is currently forming at this resistance point. So this week we could look, if the resistance here holds, we could sell dollar CAD again. However, if this resistance break upwards, then we could look at other points of resistance to sell dollar CAD again. Firstly, it will be this supply zone here. If price still goes up, then we can look at this the support of the previous descending triangle to sell the dollar CAD again. Secondly would be euro dollar. Similarly to dollar CAD, euro dollar has been somewhat ranging after this large uptrend. But on the 4-hourly chart, we can see that actually price is forming somewhat of an ascending, like a rising structure or rising channel. And before the week closed, we can see that price came all the way back down and got supported again. So this week we can see if price retests this zone again, or if it's able to break out of this consolidation structure, then we could wait for a retest to buy euro dollar. So this will be my two forecasts.
All right, thanks JJ for sharing. And in fact, I guess that we have a similar view that the dollar is weak, is most likely to weaken ahead, and so we have a kind of similar view right now. Let me share my screen again. All right, so last but not least, we are going to look at the Dow Jones. All right, so the Dow Jones as of last week, we can see that it's kind of ranging. Price shot up and came down. In fact, throughout the week, it's kind of hard to trade because we can see that one day it went up, one day it came down, it went up again, the next day it came down, and on the last day it went up again. And if we were to look at this entire rising channel, it does seem that the Dow Jones, the US stock market, is still being supported. It is still reluctant to drop. We are still unsure. In fact, we try not to predict when will be the next crash of the Dow Jones. We might not even know if it will come. So technically speaking, right now, the Dow Jones, the stock market is still appreciating. And in fact, if you look elsewhere, for example, China, the Hong Kong index as well. I mean, Hang Seng, the stock market is still on the rise. So it does seems to me that the stock markets will continue to climb in the coming weeks. So on a technical level, if we look at the Dow Jones right now, we can see a very strong rebound from the bottom of this entire rising channel. In fact, there's also a two-wave of a pullback completed right here. And that also brings us to realize that this falling channel has been broken at the top. So therefore, in the week itself, we will want to look to buy the Dow Jones, as much as I don't want to buy the stock market. This is what it is. So sometimes we just have to adapt, change, be flexible. So if we go to the 1-hourly chart, we can wait for a pullback, not somewhere to this level. Obviously, a level of interest, price being supported and resisted. So that's the price of 25,800 to maybe say 25,850. Within this zone, we can definitely look to buy the Dow Jones again. And targeting wise, we will look at the previous high right here, a pretty strong resistance at 26,400. And then we can look all the way to this supply zone at the top, which is between the price of 27,200 to 27,400. All right, so it's very straightforward. The Dow Jones, as once this entire range has been broken, it should continue to climb. And if nothing goes really wrong, I am expecting that the Dow Jones will eventually reach this very, very key level at 28,300, about there. Right, this will be a very critical level for the Dow Jones, and with that, that's for Dow Jones. And I think last but not least, I want to take a look at the Aussie against US dollar, because in this week itself we have the employment change for Australia on Thursday 9:30 a.m. So just a quick one for the Aussie dollar right now. Maybe let's take a look at the weekly charts. So in the weekly charts previously, we saw a strong resistance right here. Okay, to be exact, it's about 0.6980. But however, the bearish trend did not continue, and we are seeing the price is building upwards, still being resisted, but there's a high possibility, especially in the markets where the market is still feeling more of a risk on rather than risk off. Stock market is still climbing. It's actually good for commodity currencies such as Aussie and even Kiwi as well, or even the Canadian dollar. So looking at the Aussie right now, there's a very high chance that in this week the price may break out of this resistance level. Let's take a look at the day charts. So in the day charts, supposedly the Aussie is on the falling trend, and then this structure has been broken upwards. So that's another sign or another signal that the Aussie dollar may climb going forward. All the way to the 4-hourly charts, we are seeing that price is being supported, okay, by a rising trend line. So unless there is a break of this trend line and it continues to fall, otherwise we want to buy the Aussie dollar just like we want to sell the dollar in this case. So the first level to buy is actually wherever it is right now, a pretty good support level at 0.6925. So you can probably wait for a quick pullback, another pullback, which will complete 2 waves of a pullbacks in the shorter time frame, and that's where you can go and buy the Aussie dollar, okay, back to the previous high right here, or even as it breaks higher. But of course, otherwise you want to observe and also wait for the employment change data for the Aussie. The employment change previously has been lower or worse than the forecasts. So that's something to take note of. It might actually cause the Aussie to continue to be resistant and continue to range within that resistance. So either case, just watch out for Thursday, okay, at 9:30 a.m. if you're going to trade the Aussie. All right, so with that, I have come to the end of our weekly trading forecast for the week. So thanks for watching, and we'll see you again next week.